This is the FM Gold channel of All India Radio. In the program News Analysis, now we bring you a discussion on growing Indian economy. The participants are A.K. Bhattacharya, economic analyst, and Shishir Sinha, journalist.
The Prime Minister has mentioned that there is a target to take GDP to $5 trillion by 2022 and 10 trillion by 2028 to 2033. At present, the size of our GDP is approximately $2.6 trillion. How optimistic you are on doubling the GDP in next 5 to 7 years?
If you assume that the Indian economy will continue to grow at around 7% annually, I would say that by 2022, you are likely to reach closer to $5 trillion. Maybe you will reach at around 4.7 or 4.8 or even may cross 4.9 and touch $5 trillion economy. And I think that will be an achievement because any global economic order, if an economy has a size of around $5 trillion, it will be considered an important economic power. And if you look at the relative share in the global GDP sweepstakes, India will probably be the fifth largest economy in the world if it reaches $5 trillion. I think in itself, it will be an important landmark. But an interesting point that the Prime Minister mentioned is that he talked about how the manufacturing sector will be almost $1 trillion in that $5 trillion thing. And that, to my mind, is something that reflects and calls for some reorientation because 1 trillion size of manufacturing in an overall GDP size of 5 trillion would mean the share of manufacturing is only about 20%. At present is around 16%. So the manufacturing share will certainly go up to 20%, but it will certainly not be what we hope and we want the manufacturing sector to be, that is to acquire a share of 25% in the size of the economy. Now, from 20 to 25% is a long jump required because manufacturing sector helps create jobs. Manufacturing sector actually also helps the country to stake claim to be an important player in the global stakes. So therefore, I think it is important to increase the size of the economy, but it is equally important to increase the size of the manufacturing sector at a sharper pace.
He also talked about taking agriculture to $1 trillion also. So apart from manufacturing, the other component which has a very low share in overall GDP, which is just around 14 or 15%, do you think that we will be able to achieve $1 trillion economy, agrarian economy, by 2022?
I don't think that will be a challenge because given the manner in which Indian agriculture is undergoing a shift, it is moving away from cereals to more into vegetables, horticulture, animal husbandry, which are more value added. We are already the world's largest producer of milk. We can be the largest producer of pulses. We have tremendous potential into the edible oil segment. Now, Indian agriculture is already moving away from the cereal-based agriculture, which is wheat and paddy. And I think if this trend continues, I will not be surprised if we can manage to raise the share of agriculture as well to 20% of the GDP. In other words, the services sector, which is already little over 60%, will cap at 60%, and manufacturing and agriculture will go up to 20% each.
Growth requires favorable condition not just at the domestic level but also at the external level. Now we are facing a problem of a trade war kind of situation between US and China. How do you see these challenges for manufacturing? Because you mentioned that we need to take the manufacturing growth to $1 trillion by 2022 and that will require a shift from the present stance. How it is possible?
I'm glad you have raised this issue because exports of manufacturing is the key to raising India's overall GDP size. Now, if you had seen the breakdown of numbers on India's glory days of growth of 9% plus growth between 2005 and 6 and 2006 and 7, 2007 and 8, those 3 years when India achieved a growth rate of 9% plus consecutive years. Now, those years were helped by manufacturing sector as well as exports. Exports were growing at that time by 20% annually. And exports growth of 20% was actually giving the boost to the manufacturing sector, which in turn was providing the ballast to the economic growth. What we are seeing now, and we are going to see in the next coming years, is the export scenario will be a big challenge. Already we are seeing in the last few years exports growth has been very, very small, although in the last few months we see some sort of a surge in exports, but we are still not clear whether that surge is going to be sustainable or not, and whatever is happening in the global trade market, trade scenario is not very, very encouraging, where the US is threatening to impose duties on China and China is threatening to impose duty on US imports, and the trade war, it is feared that very soon may degenerate into a currency war. And if that happens, then Indian exports will also be very badly affected, and the WTO's future is also being questioned, and the need for regional trading agreement is becoming even more important, and India's little lukewarm approach to the idea of regional trading arrangement may prove a little costly. So on the whole, I would say that manufacturing sector is very important, but with the exports prospects not looking too bright, I would say that raising the share of manufacturing in GDP from the current 16% to even 20% will be posing a big challenge.
Coming to another point where the Prime Minister talked about organizational and institutional capacities. The present organizational and the institutional capacities are sufficient to support accelerating the growth?
I think what we are seeing in the current situation in India is that at one level we have a major infrastructure challenge. Once upon a time we had the problem on power sector, but I think of late we have seen that we are no longer that much in deficit in power. But if you look at the other core infrastructure areas in terms of transportation, and most importantly in the relatively easy availability at a reasonable price of crude oil, is becoming a challenge. So on the infrastructure side, there will be many challenges to be overcome, but the bigger challenge is in the area of land, labor, and financial sector. Now, in land, although states have come forward to relax the land acquisition and rehabilitation laws quite significantly, many of the large states have done that, and their impact on land acquisition is yet to be seen. On labor reform, similarly, many states have gone forward and relaxed and diluted the provisions in the labor laws to allow employers to go in for retrenchment at a higher cost without seeking the government approval. But even there, the beneficial impact of these land and labor reforms are yet to be seen in economic growth or the investment rate as such. So immediately I would say that the beneficial impact of land and labor reforms are yet to be seen, and on the Insolvency and Bankruptcy Code aimed at ridding the economy of a twin balance sheet problem of over-leveraged corporate sector and a stressed banking sector, I think we still have to wait for a couple of more years before their impact is seen on the growth trajectory of the economy.
You talked about financial sector. The Prime Minister mentioned that it is not the issue of taking the right decision, but it is also the issue of how we are implementing it. And he mentioned about amalgamation of 3 state-owned bank, Bank of Baroda, Vijaya Bank and Dena Bank. Do you think that this is the right decision at right time?
Given the fact that the government had come out with a program for the financial sector as a resolution of problems in terms of 4 different stages, they talked about the 4 R's. The government said that first is the idea of recognition of the problem. Now that recognition of the problem has made some progress with the RBI coming out with its prompt corrective action and enhanced recognition of stressed asset banking sector.
So it started with
AQR, and it has made some progress. Now the second R was the resolution of bad assets, with which from the April 2016 you had the Insolvency and Bankruptcy Code. Now that process is also still on. The third part of this financial sector problem was recapitalization, and last year in October the government announced a 2.11 lakh crore of package for the stressed banking sector, out of which 1.35 lakh crore was for recapitalizing the banks. And the fourth R part of that puzzle was reform. Now the reform was that how to use that recapitalization money for banks that are worthy and capable of absorbing it and helping the financial sector. There is no point in giving money to banks that are in so deep trouble that even if you recapitalize them, they will not be able to move the economic activities forward. So therefore, there was need for a merit-based approach to see banks that are doing better, have a greater chance of coming out of their mess, should get that money. Now, I consider that what has happened last week by amalgamating the bank is preparing the ground for recapitalization of banks on a merit-based approach. Now, if you see the amalgamation, there is a Vijaya Bank which was doing very well. Bank of Baroda was a large bank, was reasonably well but not as well as Vijaya Bank. And then you had the Dena Bank which was under the prompt corrective action, which was not actually been able to lend money in the market under the RBI's action. So now what we have done is that you have in a sense dissolved all the three banks and going to create a new bank which will be able to undertake reforms, receive the money from the banks, from the government, and probably help expand its lending activity in a sustainable and prudent way. Now, this still begs the question, what happens to 19 other banks that still remain in the system? Large number of banks which are in no way to function. Take the banks in the east, UCO Bank, United Bank of India, Allahabad Bank, there are Indian Overseas Bank. Now, these are banks which are in states that are politically also very sensitive. So I think the jury is still out on whether this step of amalgamating the three banks is good enough or is it just an interim measure, because we need to see how the government looks at the more difficult question of the more troubled banks and whether the government has, I would say, the political courage of forcing these weaker banks into becoming narrow banks so that their systemic risks to the economy is limited and mitigated, so that the advantages of amalgamation are truly reaped. Now, it will be a tough challenge.
My final question to you about the ease of doing business. The PM has said that the concept of doing business will be taken to districts so that the GDP of a district should rise by 2 to 3%. How practical this is, how feasible this approach would be?
I think the ease of doing business concept can be taken to the district level. Already we have an index for the different states, and I think that the NITI Aayog is in charge of that project, and we do see those different ranks coming in, and there is some sort of a competition among states. But taking it to the district level will require some further work. But my sense is that if you can take the ease of doing business concept to the district level, probably the ground level, the benefits to the people, to the consumers, to the local investors, the local buyers, the local stakeholders in the local economies. Now they will benefit. It is a difficult concept because we are still to perfect the ease of doing business index and index making at the state level. So if we need to take it to the district level, it will require some more preparation, more hard work. But I think as an idea, it is worth pursuing.
But in a federal structure, when you have a state list, when you have a concurrent list, when you have a central list, making policy for something which falls under a state list, how practical it would be, how easy it would be for center?
A very important question. We need to distinguish between an indicator and a yardstick and policies. Now, I think it is not a bad idea for the central government to come out with an index or a yardstick by which districts and states and their performance can be measured. So, yes, I agree with you that policy intervention is not good in areas that belong to states and districts, but a yardstick that measures their performance and their potential is not a bad idea.
Thank you very much.
Thank you.
You were listening to a discussion on growing Indian economy. The participants were A.K. Bhattacharya, economic analyst, and Shishir Sinha, journalist. This program was produced and presented by the News Services Division of All India Radio. This program is also available on our website newsonair.nic.in. You may email your opinion about this program at airnsdtalks@gmail.com.